about some disclosures. I am going to do real life examples. I hope that's okay with everybody. I find them a little bit more illustrative of the points that we're trying to highlight. But just because we're going to look at certain companies and I am going to do some technical analysis along the way does not mean I'm making any recommendations. All right. Also, with technical analysis, Schwab does not recommend you use that as your sole means of investment research. Past performance, of course, is no guarantee of future results. And when we talk about stop orders, there is no guarantee that your execution of a stop order will be at or near your stop price. And we'll talk about why that is in just a moment. With that being said, send in now any stocks or ETFs that you would like me to take a look at for our examples today. We're going to look at real life examples. I'm going to highlight a couple of crucial points. And I want to know from you what companies or ETFs you would like me to look at. And that's what we'll do, okay? So type that into your question or comment box down below. Also, the slides that we're going to be discussing today are available in the PDF library. Click on resources, it's above the video player, and that's where you'll find the link. All right, let's get into it. So what are we going to talk about today? We're going to talk about setting price targets. We're going to talk about taking profits, probably a good thing to talk about during a presentation about practical techniques for profit taking. I can see where that comes from. And then we're going to go over some profit taking tools in Street Smart Edge. There's actually a lot of really good stuff in Street Smart Edge that you can utilize. Sometimes it's just about knowing that it's there and available. Okay, I'm going to highlight some things that you may not have seen before or some gems of wisdoms and pearls of knowledge along the way. First of all, setting price targets. You want to do this before you enter the trade. Before you enter the trade. Consider upfront your intended holding period. How long do I anticipate this particular movement continuing for? If you're looking at the market, so let's say, all right, I see the market is kind of flat over the last couple of weeks. I think it's going to stay flat until maybe the election or until September, October. Okay, that's going to be your holding period, all right? So you start with your framework of how long you think the movement's going to happen. Then what you want to do, and this is most important, this is what separates a good trader, sorry about that, from a great trader. Identifying a point at which you say enough is enough. Good traders will go in and say, all right, here's where I get out and I know this point. Great traders are focused like you would not believe on limiting their losses. It's where all of their energy is put. It's not on how much money can I make on this trade. It's making sure they do not lose their trading capital. And then lastly, what you want to do is compare your profit potential with your risk or the acceptable loss target. And this is determined, of course, by the holding period as well as the research that you would do beforehand. So I've already got some people signing in. We've got IVZ, we've got Disney, we got BX, we've got SCHG, we got the Fuse, we got Microsoft, and we got Berkshire B. Keep sending those in, and I will continue to take a look. First, how can we get those price targets? Well, we can do one of two or many things, really. I mean, these aren't the only two. I should also make sure I state that. Sure, there's even some really cool stuff out there that I haven't even thought of. But you could do fixed price or percent. That's where you're looking for a dollar amount or a percentage amount from your entry price, or you're going for a measured move. All right, or you're going for a measured move. So let's take a look at what that might appear to be. Let's go over to our Street Smart Edge trading platform. I'm going to maximize this for everybody. I hope that is all right with you. And I'm going to go year to date. Okay. All right. So I have IVZ is my first one. IVZ, Indigo Victor Zulu, for those of you following along. So one of the things you might do with IVZ is you say, all right, I see it's got this little area here, been kind of trading flat. I think I'm going to get in this trade now. Maybe I'll put in a limit order at $10, and I'm looking to make 5% on this particular trade. Okay, so you're going to go up about 5% from where you're at. What you don't want to do is be unrealistic and say, I'm going to go up $5. That's a 50% gain. Yeah, it'd be great if that could happen, but is it realistic? I don't know. 50% gain seems like a bit much. So what you're wanting to do here is you want to set a realistic expectation. One way you can do that is say, well, how high does it normally go when it shoots up, right? You take a look at these previous upswings. How high does it normally go? And that might help you identify. Or you say, well, I always want to make 10% on any trade. Every trade that I'm doing, part of my trading strategy is I want to make 10%. Great. So then you lock in your 10%. That's using a fixed price slash percent target. You can do this in dollars as well. But over time, what you'll probably go to is something referred to as a measured move. Okay. A measured move is similar to what we were just talking about. All right. We've got Disney coming in. Let's do Disney, DIS. All right. So here's how a measured move in Disney would look. Let's see if we can expand that. There you go. What you're doing here, and this is really cool. This is Street Smart Edge that I'm looking at. It's a flagship trading platform here at Schwab. You can get it complimentary as a client. Just go under schwab.com, under the trade tab at the top of the page, and then you're going to click on Street Smart Edge. So here's how a measured move works. Kind of like I talked about just previously, you're looking at the previous upswings, okay? You see how you have these previous upswings right here? That's your measured move. And one way you can do that is say, all right, this one went from 85 up to about 105. All right, great. So I've got about, what, a $20 measured move. One of the things that I like to do, and this is no secret out there, but here's something that you can do as well. I'm going to add future time real quick here. Holding the mouse over there, control, left click and hold, and pulling it out. All right. Watch what you can do on Street Smart Edge to help you with your measured move targets. Come under your draw tools, go into segment line, pick a color that you really like. I'll stick with pink. And then you're going to take measured moves. Now, here's the tough part. This is where the art of the market comes in to all you viewers out there. Some of us might say, well, I'll start from this level here, which is the bottom of the candlestick. Some of us might say I started from the very bottom of the wick of the candlestick. Okay. Some might say, well, I split the difference. I do the halfway line. That's fine. You know, whatever it is, the idea here is we're going for a zone, and that zone is probably somewhere in here. Wouldn't you agree? So I'm going to left click, hold, and drag, and I'll just release it right there. So there's one of my measured moves. But watch this. I'm going to add in my second measured move. Let's go to the third measured move, fourth measured move. What comes next? You guessed it, the fifth measured move. Now, here I could go to this spot right here, or I could go to this one. In this case, I'm going to go to this one right here, because the way my trading strategy works is it says if I pull back by a certain amount over 3 or 4 days, and I want to make sure I take into account this little pullback right here. So I'm going to release my measured move right there. I'm also going to get this measured move right here. Okay, now watch what you can do. Watch how cool this is. You can grab each one of these, and let's say you think this 110 is a bottoming point. Maybe you've identified this resistance level over here, and you saw a little bit of support over here. Maybe you're thinking about the psychology of the number 110. What you can do now is you can left click and grab and drag your measured moves. What? Yeah, get that going. Left click and drag. I'm just moving these little guys right along. And boop, there you go. Like Bob Ross said, if you don't make the noise, it doesn't work. Something like that. All right, so you see how I've got kind of my measured moves, and these are all also forming a bit of an average, aren't they? How neat is that? I've got a little bit of an average, and my gosh, these measured moves seem to go in the same spot. It's either this one right here or that one right there. So not only does my measured move give me how high I think this could go, but look at this. It also lets me know about how long I think it could happen. So these measured moves took this height as well as this amount of time. So if I'm entering into this position, where do I think I could see profits? Well, let's say I split the difference and I'm somewhere around here. So I've got a 122 price level. That gives me about $12 of profit. So there's about a 12% gain or so. This is what I've started doing over time. I first, when I was utilizing trading probabilities and profit points, I was using the fixed price target or the fixed percent target. Over time, I started saying, well, let's see if we can Mark Twain this thing and see if we get history to rhyme. What Mark Twain said, history doesn't always repeat itself, but it often rhymes. So I'm looking for history to rhyme a little bit, and that's where I'm getting these numbers from. So that's the way you can work out a measured move. Hope that worked out for everybody. I just love that. Again, where did I get this from? That's your segment line right here in Street Smart Edge under your draw tools. Okay, click and click. Love it. All right. So you could do a fixed price target, whether you're doing by a dollar amount or a percent, or you can do the measured move. It's totally up to you. Here's the thing, you want to stick with it. Whichever one you decide, stick with it because you're going to have to check your work. How does my performance do? And if you go from measured move, fixed price target, back to measured move every other trade, well, now you're not consistent. Your variables are changing, excuse me. You want to keep your variables consistent. That way you can see which one of them is working and which one of them needs to be changed. So let's talk about some technical profit taking. We're going to go into the range breakout. We're going to talk about the continuation pattern breakout, and then we're going to look at a reversal pattern breakout. Okay. So here's how the range breakout works. Let me see if any of the ones that we've written in has a range breakout. Let's go back over to Street Smart Edge. And this is what I love about doing Street Smart Edge is I can just type in all of this and see if we have a range breakout. Okay, Q's hasn't been very range bound. MSFT, not very range bound to the side. We've got WKHS. Oh boy. All right, that's not very range bound at all. Good on whoever it is that caught that before the big movement right there. Let's see, do I have another one? RCL. Okay, all right, let's do RCL. Let's do RCL. So here we have Royal Caribbean, and Royal Caribbean was kind of trading in this little range right here. Okay, so you see how it was pumping up against and then dropping down, coming up. Now you kind of have a little bit of a range over the last couple months where I would say this right here is sort of your topping point. So we're going to draw in our range by creating a support line and by creating a resistance line. There we go. All right, so that could be your range. You know what? I got to be honest with y'all. I'm not really a big fan of this range. Not a big fan of it. I just don't see it pumping up and down like I want to. All right, so maybe what we do instead is we draw some trend lines. All right, maybe we're connecting some points right here. Left click and drag, and I'm just getting this one right there. Excuse me while I clear my throat. Let me clear my throat. Any DJ Cool fans out there? All right, so look at this. This is a little bit more of a range bound upward sloping range. So I'm going to take out that resistance line. I'll leave that trend line on the bottom, that support line there, just to see what happens. But here's what you're trying to do with this. Similar to the measured move, you're looking at the height of your range. Up, down, okay? Now, you could math this thing out, or you're like me and you just said, you know what, I'm just going to let this software do it for me. Great. Grab these segment lines and make them work to your advantage. Jeffrey, why didn't you do that one? Well, it didn't quite hit that support line. I could add it in there, but I'm going to just leave it out for now. All right, exit draw mode. Here's what you're doing. Now we have it touching its support line. What you'd want to see in a range breakout is it come back up similar to how it did here, but you need it to hold. So here you have a fake breakout, a little falsifier. All right. So if you had an actual breakout, you could grab these, click it and drag it. And so what you're looking for on that range breakout is for this to continue in the same style that it had previously. All right. If it would have held, this was just a false breakout, came up, checked you out, and then went back down. That's not what you want to see. You need it to break out and hold. Okay, so one time close is not enough. You need a little bit more confirmation than that. So range breakouts are something like this. You can have a sideways range, you can have a downward sloping range, you can have an upward sloping range as we've shown here. But the range breakout is saying, I don't buy it until it breaks above this point and can hold it. I like to wait 3 or 4 closing periods personally, but it's completely up to you. Whatever you'd like to do, give it a go, give it a try, and see what you can have happen. All right. So that's your range breakout. That's what you're looking for with that one. Here you have an example, and you notice with this one, you've got your range forming right here. They just took that after the breakout, and then here, you got your one breakout. There's 2, 3, 4 closing periods. Great. Now, how high do I potentially have my profit point going? Just the size of your range. Right up there. Once again, if you don't make the noises, they don't work. All right, hope that was helpful for everybody out there. Next, let's look at a continuation pattern. This one's quite popular. This is your triangle. Okay, the idea with a triangle, what's happening here is buyers are no longer as bullish. Okay, so they're not pumping it higher, but sellers aren't as bearish, so they're not dropping it lower. It's kind of forming this little line. Okay, and it's condensing, getting closer together. What's happening here is usually going to be a known event. So with these continuation patterns, you're generally butting up against a known event. It could be a Fed announcement. It could be an earnings announcement. It could be a developers conference, for example. It could be any one of these things in a number of topics. But the idea is with continuation patterns, you're looking for a breakout and it's on a known event. So let's see if we can find from the list that you wonderful people have provided, if there are any breakout candidates. Let's look at BX. That's one that we received. I don't see one there. Let's go to the Qs. I'm pretty sure we don't have any breakouts there for the continuation side. BRKB, BRK/B. There we go. Anything there? Okay, so what am I looking for? Well, I'm looking at these earnings announcements to see if anything condensed during this time. And really, there hasn't been anything there. So what do? You go on to the next thing, WKHS. Nope. That might have been a good breakout candidate, by the way, if you were looking at this line right here. Here's your resistance, maybe that right there. And maybe you had a support line, see, somewhere down there, but that's kind of tough, isn't it? That'd be tough for me to say, well, let's put the support line here when really it's down there. So not a true range breakout where it's in a sideways range, but a really good breakout candidate, how you had to come above here and then take all the way off. Really nice looking chart right there. Good job for whoever caught the workhorse movement. Let's see, what else do we have? CRM, let's see if they've got a sideways movement. Nope, going into the earnings, they just dropped. Going into this earnings, kind of came up and down, but nothing really happened there. We got one more candidate. Let's see if we can do Zoom. We'll do Zoom. All right, so here's their earnings announcement. Nope, no sideways breakout there either. So we don't have very many sideways breakouts from the names that have been listed, and that's okay, because we still have our PowerPoint presentation showing you this is what a continuation breakout is going to look like. I think I said range breakout there a couple of times. I apologize for the confusion. We're looking for a consolidation and then a continuation. Consolidation, continuation. How high up do you think it's going to go? Well, you take where it broke out from, and then you just look at the range previous to that. Take that number, and then you put it right there. So that segment line I showed you earlier is pretty great. I got some folks writing in again. Let's try these two. Cody, I thought it was Cody until a young lady was like, no, that definitely is not how you pronounce that, Jeffrey. Don't see any consolidation and continuations. And Carnival, don't have any there. That's okay. Let's go. Ooh, let's look at the spider real quick. What do you guys think about that? Okay, any consolidations that happened? You may be having a little bit of a consolidation right here. So let's draw that segment line right there. And then you've got this one coming up here. All right. So that could be a little bit of your consolidation formation, but we need to have some event. Tell me, is there a known event that's going to be happening within the next week to 2 weeks? Anything. If you know it, let me know. I can't think of anything off the top of my head that could be a big movement, but this could potentially be the formation of a continuation triangle. You notice how it's not a perfect triangle. It doesn't go down to the bottom, up to the top, down to the bottom. It's a tug of war between the buyers and the sellers. So you just want the top parts to go down and you want the bottom parts to come up. And then you've got your continuation triangle right there. Cool. Let's keep going. Continuation pattern. This is a flag. This is where you have something that's been on a really nice run, perhaps because of an earnings announcement, goes up, takes a little bit of a break. We were on a sprint. Now we need to take a rest because we have the rest of the marathon to run through. So this is a flag pattern. You can also see it formed as a pennant where these two come together, kind of like that triangle that we saw earlier. But the idea with the flag is you want to have a big breakout point. Usually, again, it's going to be an earnings announcement. Those seem to be the best formers of the flagpole. But notice it doesn't have to be one single day. It could be 2 days, it could be 3 days. But you're looking for a big breakup, and then you want it to come down, almost like it's taking a breath, and then breaks above that come down point. And then where do you think it's going to go? Again, you're just looking at that flag and then adding it right there. Okay. Like that, like when that happens. So right now in the market, you might be looking for a flag pattern. You might be looking for a triangle pattern. Why? You're looking for a continuation of the upward moving market. Continuation patterns, that's what these are. Something you may be keeping your eyes on, though, if you're bullish or bearish, is the double bottom or double top. Here is where you're coming down, finding a low. Buyers come in, can't push it high enough. Sellers take over, but the buyers do not let it go back below that support point, its previous drop. Buyers come up. Eventually, the buyers overtake the sellers in this part right here, breaking above its previous resistance point. And again, you notice not here, not there. It's kind of in the middle. This is an art to the market. This is a bit of an art to the market. Where do you think it's going to go? Once again, it's that measured movement of the W pattern. Now, I don't recall seeing any W's forming. In the overall market, you've got that V shape, which is great. Hopefully that holds. Let's look through some of the other examples people have written in. You've got Verizon. Okay, so this is a really good potential opposite. All right, this is a double top. Same thing can happen. Double bottoms happen as you reverse from a downward movement. Double tops happen as you reverse from an upward movement. So what do you have going on here? I've got my segment line. You've got this movement up right there. There's your first top coming down. Here is your second top coming down. Now, what are we looking for? Well, this was in a bullish movement. What we're looking for is for a break below this line right here. Okay, so that would be your double top reversal. You're going from a bullish position now into a bearish movement. All right, that's what those double tops are doing. Double bottoms is just the opposite. I'm going to see, got a couple more people writing in. Oh, I always appreciate the commentary. Thank you guys very much for the kind words. Love you all to pieces. OLED, let's see if we can get something out of that one. And we do. Great suggestion. Take a look at this. Down. Whoops. You got to grab the right tool, first of all. Okay. If you're going to do it, you got to have the right tool. You got to have the right brush. This is your world. This is your world. You paint whatever you want in it. You want to throw in a happy little tree? Throw in a happy tree. You want to toss in a happy little circle? Look at that. Just look at that. This is your world. Just put in circles wherever. Little throwback to Bob Ross. Great human being. All right. So we've got our one down, comes back up, second down. Now, it doesn't always have to go to the exact point. Here, you've got this movement back down. You just need something substantial, right? That is not quite substantial. Here, you're going over half the distance. That I'll say is substantial. And then you come up. Notice here, I'm going to draw our line. Here is what we were looking for. Okay, let's shrink that back down after we exit our draw mode. We had our double bottom right there. And you know what we're going to do? We're just going to take our little oval. We're just going to grab this little guy. Why don't you just come over here with us? All right. He doesn't want to come over there. He's a shy little devil. What we're going to do, we're going to draw ourselves another oval. We're just going to put that one in the background for now. Maybe you come back later. Here's our oval. Oop, right there. So you have our double bottom formation, and then here's your breakout. Now, this would have been a tough one to trade, especially for me. I probably would have gotten taken out on this one. Why? You broke above one closings, almost two, three, let's say that's four. Well, my strategy says four closings above the breakout line, and I buy. Here, I'm a buyer, and then, of course, what does the market do? Reminds me that I don't know everything. Drops back down. What would I normally want to do? Sell. Sell at that point, and then what does the market do? Great. Now that Abelos is back out of this, let's take off and make people some money. Who else has had that story happen to them? So these are examples of reversal patterns, okay? That double bottom, or it could be a double top. Reversal patterns. There's also a lot more out there. If you want to take a look at one, check out for homework the head and shoulders pattern. That's something that we actually saw back in 2008 on the S&P 500 if you want to see an example of that. Now let's talk about what we came here for, taking profits. First of all, managing your trade helps you limit your losses. That is the first successful pillar of wonderful investors. Limiting your losses is imperative. The other one is letting your winners run. You do not want to hold underperforming trades, and you do not want to exit your winning trades too early. Let me show you some things that can help out with that. First of all, you have trailing stops and you've got technical stops. Here's how a trailing stop works. It's like a stop on a leash. You enter it and you say, start 5% below my entry price. Our entry price here is $30. Starts coming up. Well, that trailing stop, now that this has gone up, that's coming up with it. Right? I hope that's the song from The Price is Right with the yodeler. So as it comes up, so too does your trailing stop. But notice as it goes down, the trailing stop just goes flat. Trailing stop knows how to go two directions, up and sideways. And then once it gets 5% away from that trailing stop point, now the trailing stop goes back up with it and it rises along with that. And you notice here, my friends, this is utilizing both pillars of successful trading. Number one, it's limiting your losses. If it pulls back by 5% from any high price, you're going to get out, thus limiting your losses. But it's also allowing your winners to run because it's a continuation movement that you're just limiting the losses from. So you're not picking a high point and saying, get out here. You're saying, just go as long as you want. Only get out if you fall from a high point by 5%. So that's a trailing stop. I really like this. It's an automated way to use the two pillars of successful trading. All right, now I got some questions coming in. I want to make sure to cover these. This is one. Hey, Jeffrey, a couple questions. Do you ever get out of a position after a specified time of it not doing anything? Ooh, really good question. Yes, I do. There's a follow-up to this one, though. Have you found any rule that works for you to keep profits, such as exiting 50% of the position when you reach 70% of your target, perhaps? I would check out if Intel you get a chance. Okay, let's look at Intel. So we're going to go over to INTC. Okay. Now, maybe you get into Intel after this comes up. Maybe we're late to the party over here. So we get into Intel right here. And what am I looking for at Intel? Maybe my reasoning for getting into the trade is I want Intel to benefit from the stay-at-home economy. So I get into Intel and I'm saying, all right, let's make 10% off of this. All right, so I want it to go up $2 and some change. Maybe it does that and I exit the position. Or maybe I say, well, I'm looking at the measured move. This one from here to here is about $8. I'm looking for an $8 gain. And it doesn't quite happen, right? So maybe what you could have done is utilize that trailing stop, in which case you might have gotten out at one of these points, or almost certainly you would have gotten out down here. But here's the thing, and this is why you want to keep that time frame in mind. If you are in a position, you are not married to it. There is no reason for you to stay in it if it's not working to your advantage. So if you said, well, I think the stay-at-home economy is going to benefit Intel's performance, and clearly the stay-at-home economy has been into effect and Intel has not been a beneficiary, well, your original thesis no longer stands, okay? Think about exiting and going for other opportunities. You don't have to exit all at once. You can take a quarter of your position off the table. You could take 50%. You could take 3/4 off the table. That's more in line with what a lot of traders do. They're generally not going to do all in or all out. You toe dip to get in, and then you toe dip to get out. So it doesn't have to be an all or none game. And yes, Joel, to answer your question, I will get out of a position if it's not doing anything, because if I see other opportunities somewhere else, then I'm going to want to take those opportunities. Okay. Do you suggest, this one's coming from North Carolina, do you suggest I buy and sell? Whoop, just lost my spot. Got too many questions coming in. Keep them coming. Thank you. You suggest I buy and sell based on the price to make percent rather than buying and setting to add additional money past what I already bought. Okay, so if I buy, let's do Royal Caribbean at $10 and it goes up 10%, should I sell now? Okay, let's look at Royal Caribbean, RCL. So if you buy today and you're saying I'm not looking for a breakout of this movement, I'm looking for a 10% gain, all right, which in this case would be $5 because it's now at $50. So it goes up $5. Great. If that's part of your strategy, then you exit. But notice our measured moves right here. Let's just bring them down because you can be a range-bound trader. That is absolutely something you can do. Let's say you're looking at the previous measured moves. Well, these are going beyond 10%. All right. I have never seen anybody lose money by taking profits. So if you say, I want to make 10% on every trade, great. But over time, you may start to ease yourself into the measured move where you say, I believe I can make 10%. I'm going to limit myself to a 3% loss. But just because I make 10% doesn't mean I'm going to sell. Hope that answered the question for that one. Really good questions. I've also got, thank you. Oh, you're welcome. Thank you guys very much for the wonderful comments. Are these Schwab Live sessions recorded and archived anywhere? Thank you very much. This is coming from Jeff in Tennessee. Jeff, we do not record these as of right now. We are looking into potentially doing that to make them available to you. However, if you go to Schwab's YouTube page, we do have some videos archived there. Now, they're not quite like these Schwab Live dailies that you get segmented wise throughout the day, but they do have some really, really good talking points and information. Lots of gems of wisdoms, lots of pearls of knowledge. This one's coming from Jeremy. Can a trailing stop be set as a stop limit, or is it strictly a market sell? Great question. It is strictly a market sell. Once it hits your stop price, you are out. Next question. I used trailing stop and it got executed, but then the stock price went up again. All this happened intraday. Yep, I called Schwab. Was advised to take into account average true range. Oh, I love it. Look at that. Your check is in the mail from California. What do I have down here already? Average true range. Whoops. No, I don't. I have the implied volatility average. That is not the average true range. All right, let's look at another position. What else did you guys write in? Let's look at the SPY. All right, let's look at the overall S&P 500. Okay, so what is the average true range? Well, where do I put my stop? Is it 5%? Should it be 10%? Should it be 2%? Where would you want to start the trailing stop? Come over here to studies, go into view all studies and select average true range. Sounds like that should be a really good action movie, doesn't it? In a world coming to a theater eventually is the average true range. I'm going to make the line kind of fun right there. I hope you guys don't mind my Don voice. Pick any color you'd like. Let's go kind of orange. Orange is a fun color. I'm going to hit OK. All right. Here's your average true range. This is just letting you know how it's changed over time. Really, all we need to know is the number. So right here, $6.50. What this tells me is that on any given day, the S&P 500 can go up $6.50 or so, or down $6.50. So if I'm setting up my trailing stop, I'm probably going to want to be at least $6.50 away from the current price. Okay, you may have put your stop in there a little bit too tight, and so that's where the average true range comes in. And you can do this for any position. If we go back to Royal Caribbean, they've got an average true range. So where do I put in my exit? Maybe you don't use a trailing stop on this one, but you say I'm looking for a break below this price line. How far below? Average true range, $5.87. So we start here, I come down $5.87, somewhere around the 40 mark. Here's something I'm going to suggest that you take a look at. Do some research. I'm not saying do it, but do some research on this. Look to see how many times, if your stop lines up with a nice, easy number to remember, in this case, $40, how many times do you get taken out and then have the position go up higher? Find that number out. If it happens more often than not, you may want to go a little bit below that natural line. So if you say, well, the average true range comes down here to 40, but you're like, darn it, this market just sells me out and then keeps going up. Maybe consider, if your average true range falls somewhere on an easy to remember number, go down a little bit more. I always like to put my stops on kooky numbers. So I wouldn't put it at 40, I'd put it at maybe 38.18, for example. So I hope that helps. All right, let's go back over and talk about something that I absolutely love. These are technical stops. Here you're looking for trend lines, all right? So we're going trend line, support and resistance levels, or moving average. And you can see a little bit of all of these. Let's start with trend lines. Trend lines is something that you draw, you artist, you future Bob Rosses of the world. This is the art of the market. Not everybody is going to draw their trend line right here. You notice this one came down below there, but this one didn't. Some people might say, well, I don't let any of my trend lines have trading below that. Okay, that's fine. Let's do this real time though. How about that? What do you think? Let's see if I've got any other positions coming in. I do not. So let's go back to some of our favorites. One of the ones I could not find something to work with earlier, or I'll bring up now, was mentioned earlier, WKHS. Okay. All right. Let's just get rid of this support and resistance line. Okay. Here's a great example. If I were to look at this, you notice how this is running up exponentially? Look over here at my percent gain. Okay. Year to date, this is up 220%. Not too bad. What else is that in line with? Nikola. Well, that one's going up quite nicely. That one shot up. Notice exponentially rose and then had to take a breath, came back down. Nikola is doing great. Zoom Technology also doing great. This kind of chart, by the way, I would like to see over something like a WKHS. Reason being, this is almost too much of a curve for my trading strategy. To go up 200% from, what is that, June, we'll call it June 1st until today, that's less than a month, and it went up 200%. Hard to fathom. But what you can do is, if you were interested in this position before it took off, maybe you come in here and you draw a trend line. So what am I going to do? I'm going to left click and hold, and I'm dragging, and the more times it hits, the stronger it's said to be. So I might release down here, so I get this one, but then I don't get this one. I want to get the most that I can. So I'm going to go somewhere right about here. So as I was thinking about entering this trade, maybe back here somewhere, or even right here, I am going to put my stop somewhere below this trend line. How far below? Take a look at that. You've got it. Average true range. See where it suggests you might want to consider. Okay. Let's look at something like a Zoom, since we brought that one up, and that's a topic of conversation. Where are we going? We're doing our trend line right there, here, or here. Or, you know what? Let's try this one. Let's see what this can grab. There's one right there. Not that great. So let's try going from here. More times it hits, the stronger it's said to be. And I think I like this one. Why do I like this one? Well, we capture all of these hits right here. We get a false breakdown, and then we get this one right here along with that one right there. Okay, so as it comes up, let's say we get into the trade somewhere over here, bounces down. If you hadn't sold out right here and you're still in, great, and it comes up, every time it hits off support and comes up, guess what? New opportunity. New opportunity to do what? Draw our friend the little oval. That's right. We are going to draw our friend the little oval. So it comes down and pulls up. That's your opportunity to reset your stop. Comes down and pulls up. Next opportunity. Reset that stop. So you're going to keep resetting these stops a little bit higher as they hit off of that support line. Comes down, pulls up, reset that stop. So you see how I've manually reset the stop Again, I'm limiting my losses and I'm also letting my winners run. That's exactly what you're doing with this trend line stop. If you're going to use support and resistance, great. Love support and resistance. Once again, it's looking for a breakout and then finding that support. Old resistance tends to become new support. Didn't quite do that in this example. Let's see if we can find one though. I've got some folks still typing in some positions. LAM, there it is. And while I'm doing that, I got a question. How can I see percent shown on the left side? How can I delete the lines that shows, but I did wrong a line? Yeah, okay. So let's get into LAM. First of all, LRX. I need to type that in. LRCX. How did I get these over here? I love them, by the way. So if you want to know how to do that, follow along here. Settings, come down here, show percent scale. Show percent scale. That'll put these little percentages on the left-hand side for you all. Okay. All right. Now, question was, what if I draw something and I don't like it? You can draw and maybe you go like, oh man, that's not where I wanted that line. I want to get rid of that. Or you know what? I've got another line that I drew and this one seems to hold truer. How do I just get rid of this one? Exit draw mode, click on the line. Once it lights up and you can see those two little dots, delete. There you go. Hit delete. Now you're out of it. All right. So Lamb Research, good example. Resistance line right here. Could not get its head above there. Could not, and then it boom broke up. Then what happens? Old resistance is new support, like multiple stories on a building. So if you were in Lamb Research, maybe you were writing it up as it was doing this. Great, great, great. Okay. Comes up, breaks up, it holds. Now you're saying, ooh, okay, I might try to get a little bit closer. My strategy says, and this is just an example, my strategy says when I have a breakup and then a hit on support, I tighten up my stops. Tighten up my stops a little bit. That could be part of your strategy. It's completely up to you. But that's how those two are going to work. And then lastly, for the support and resistance, you can utilize the moving average. Let's go back over to our chart. Let's look at the S&P 500 once again, SPY. We're going to come in to our tools. So you open your shelf and you're going under studies, view all studies. I'm going to add the three most popular simple moving averages. So I'm going to go 1, 2, 3. This one I'm going to put in yellow. That's going to be my 20. This one I'm going to do in this very lovely aqua. Why? Because it's summertime, and if the pools were open, I might be swimming in them. And I'm going to do this one in red. This is my uh-oh line. 20, 50, and 200, the three most popular. At this point in time, they become a little bit of a self-fulfilling prophecy. Why do we use them? Because everybody else does. So here's my 200 right there. Notice that we are right at that 200 line. Let's get rid of these. And I click on it and I hit delete. Click on it and I hit delete. So now I'm at this 200 line. Found the 200 right here, also found it right there. So if I'm entering into the S&P 500, I might be saying, all right, a break below the 200 could have me worried, but I've got the 50 right there too, don't I? So just because it breaks below the 200, I might not sell out. My strategy may say, if a simple moving average is within a certain percent of another, go with the lower simple moving average. Right now, if it weighs the 50 was way down here, it might be a different story. So maybe I take the 50 line and I go down how much? $6.55 or more. So I at least want to get that much. Right there, where we at $7, go down here, great. So I would have my stop somewhere around there. So that's how you can use these moving averages. If we just go through some of the ones that we've looked at, we have the simple moving averages on here, well above. So that one's going crazy past those simple moving averages. Royal Caribbean Cruise Lines, right? There's our 20. Doesn't seem to pay a whole lot of attention to it, but kind of liked the 50, and then it seems to be holding on to the 50. Some positions will pay more attention to one moving average over the other. What you want to do is look at the one that it's giving more attention to. Back here, it really liked the 20, didn't it? Yeah, really liked the 20. Then here, it liked the 20 again, but now that it's broken below the 20, well, where do we go? Now it's starting to cuddle up to the 50. Okay, let's look at one more example. Let's do Verizon. All right. And if you want to ghost these out, by the way, if you just click on this, it'll get rid of those segment lines, but it won't delete them. Not sure if everybody was aware of that, but that's available. And then you can also ghost out your support line. So here we have our moving averages, and look at that. Look at that 200 holding strong. So if you were somebody that was shorting Verizon, you may want to have your get out now just slightly above this 200-day moving average. Here, this is a great example. They don't always work out perfect. This one, Verizon doesn't seem to pay too much attention to either the 20 or the 50. Okay. Likes the 200, yes, but the 20 or the 50, in this case, because it doesn't seem to hit off of it many times, at least since the recovery on March 23rd, that is not something that I would be giving a lot of credibility to. It just hasn't given it the necessary oomph or gumption or gusto or focus or any other cool word that you want to think of. All right. So let's wrap this up. Let's talk about maintaining an objective trader mentality. Avoid your emotions. Get out of those. If you find yourself getting emotional and saying, hey, I need to do this now or it's never going to happen, that's a huge red flag moment. Stand up, get away from your keyboard, walk away, and take a breath. I've talked about some tools that you have available in Street Smart Edge. Let's review it. Previous trends and confirmed patterns provide a technical basis. There is no guarantee of future performance, though, so we're looking for history to rhyme. You can automate the process with trailing stops. And then, of course, you've got Street Smart Edge helping you out all along the way. You've also got other relevant tools and resources. You've got technical screeners in Screener Plus. This is where I actually start my trading day. I look at my screener and see what candidates match the screen that I'm looking for. You've also got technical analysis and insights through Market Edge as well as through Recognia. These are third parties that provide their content on our platform. And then, of course, you got us here at the Learning Center, or as I like to say at the Fun Place, on Schwab Live Daily. I want to thank all of you very, very much. I appreciate your questions. Your comments were absolutely wonderful. Thank you so much for the glowing remarks. You guys are great. But hey, stick around because coming up next, you've got Charting the Markets with Chartered Market Technician Lee Bull and Director of Schwab Futures, Mike Zaremski. Also, I will be back next week. This is next Wednesday, July 1st, and I'll be co-hosting today's options market recap with Schwab's Director of Derivatives Analysis and my friend, Mr. Nate Peterson. I thank you all, as always, for sharing your time with me today. I hope you have a wonderful remainder of the week. Take care.
Thanks. Bounced a trade idea off my firm. They don't get it.
Schwab shows you indicators, proprietary research, helps you see the full picture.
Speaking of...
Trade up to Schwab. The gut check you want, the intel you need.
Hello, and welcome to the Quick Start video for the Account Details tool available on Schwab's Street Smart Edge platform. Let's load the tool by clicking on Launch Tools, and then launching the Account Details tool. The Positions tab displays all of your open positions with market and fundamental data for each. Use the Positions tab to close positions, add brackets, or view lot details by right-clicking on the security. The Order Status page shows all order activity, including conditional and bracket orders, as well as the execution details of filled orders. Use the Order Status tab to cancel or change open orders, add or edit bracket orders, and activate, edit, or cancel conditional orders. The Realized Gain Loss tab displays realized profit or loss information for any positions closed during the current day. The Transactions tab displays transactions for the current day, as well as transactions made within the last 90 days. The Transactions View page is read-only, so the data cannot be manipulated, but can be exported for use with other programs such as MS Excel. The Balances tab shows account values, margin information, and more detailed balance information for your account. For a quick, constant view of your balances, the Balances bar is located at the top of your primary layout. Use the Show Hide Balances button in the upper right-hand corner of your screen to display or hide this information. All balances are automatically updated every minute or after a transaction, whichever happens first. The Alerts tab allows you to set up alerts based on price, volume, or time criteria that will notify you in the Messages tool when the conditions of the alert are met. Alerts provide notification only and do not place orders. Use conditional orders in the All-in-One Trade tool to set up instructions that trigger and place orders only when your criteria are met. This concludes this quick start guide for the Account Details tool on Schwab's Street Smart Edge platform. Please check out the Learning Center and the online help manual, both of which are located under the Help menu. Additionally, you can visit the calendar on schwab.com/live for a schedule of upcoming live platform videos. Thank you for choosing Charles Schwab, and have a great day.
Dividend yield is a ratio and one of several measures that helps investors understand how much return they're getting on their investment. For companies that pay a dividend, you can calculate dividend yield by dividing the expected income, the dividend, by what you invest, the price per share. Take two companies that both pay $1 per share. One stock price is at $30 and the other at $20. The first company's dividend yield is 3.3% and the other's is 5%. The company with the higher yield looks like a better investment because it shows a 5% return. However, a healthy company may attract more investors, pushing the share price up ahead of a dividend increase, which would lower the dividend yield. At a distressed company with a falling share price but unchanged dividends, the dividend yield would go up. But that dividend payment might soon be reduced or even canceled by the board. Investors looking for a stable dividend yield should understand what's driving the yield and focus on established companies with a history of both consistent earnings and growing dividends.
While fundamental analysis can help you decide what to own, technical analysis may help you know when to buy or sell. These two approaches offer distinct strategies, and traders usually align with one or the other. But they're actually complementary, and using them in combination can give a more complete understanding of markets and their direction. If you are generally a fundamental analyst, consider that technical analysis could help you identify favorable times to enter a new trade or exit an existing position in the short term. Because many traders believe the trend is our friend, watching a stock's price fall through its 50-day moving average, for example, could suggest that this former bullish trend may in fact be broken. You can use longer moving averages to help determine breakout patterns over longer timelines. Fundamental analysts may also benefit from another tool used by many technical analysts, volume trends. When you track volume indicators, you may be able to get a picture of how other traders in general see the stock you're following. Again, it's all about the trend. A gain in volume can indicate increasing momentum, while a drop in volume can indicate that traders are moving away and could soon see a reversal in price. Using fundamental analysis alone, it could take months for negative information to come to light, but incorporating technical analysis could help you quickly get a sense of where the stock is headed. Technical analysts can look at a chart and decide to buy a stock based on volume, based on momentum, and price action. But you could be misled when it comes to price action by a company with poor fundamentals. Having some idea of a company's health can help a technical trader develop a solid foundation on which to build their trade. While it does not guarantee success, having another layer of information based on price to earnings, debt to equity ratio, or other data can add confidence to your technical viewpoint and offer another checkmark in your pre-trade checklist. While technical analysis is generally used by short-term traders, fundamentals are often used by long-term investors because market and economic cycles can be very long. If the prevailing long-term trend is bullish, the short-term trader may have an opportunity to join this long-term trend during a period of short-term weakness as price retreats to a long-term trend line or support.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, you get commission-free trades and quality trade executions from the only firm that offers a satisfaction guarantee. Schwab, the better place for traders.
Hello and welcome to the Quick Start video for the Watch List tool available on Schwab's Street Smart Edge platform. The Watch List